Hey everyone. So the stock market was up another 779 points today on the news of Bernie Sanders ending his campaign and Dr. Fauci's prediction that this week will mark the worst week of this health scare. After today's run, the market is now up nearly 29% since the recent market low just 2 weeks ago. Said differently, the market has now recovered half of its losses. That's a 5,000 point gain for the Dow in just 2 weeks. Should we call that euphoria? Or is the market correctly pricing in a return to normal economic conditions in the near future? We are going to discuss and try our best to answer these questions in this video. Before we go into detail on these questions, go ahead and drop a like on this video, subscribe to the channel, and comment below your thoughts. Now, first of all, we have to start off with the recognition that this whole cessation in economic activity was man-made to slow the rate of new cases during this health crisis. As of January, our economy was booming with the lowest level of unemployment in recorded history, and businesses were reporting record levels of earnings. But then the unforeseen happened, and the market tanked. And boy, did it tank. The market dropped 30% in just over 20 days, the fastest 30% drop in US history. Unlike previous bear markets, though, this one was triggered on purpose because people's health is more important than economic activity or the stock market, and that won't and should not change. The drop in the stock market to the 18,000s represented the realization that we just don't know when businesses will reopen or when normal economic activity will resume. And I don't think we have gained much, if any, additional clarity on this question. The market is simply trying to predict the unpredictable. In fact, normal economic activity may not resume for some time because I expect social distancing measures will continue in some form when the economy reopens. That likely means that we will not see people crowded at restaurants, airports, cruises, or even cramped office environments for some time. This will be a transition process, which is one reason that the market may have overcorrected too far to the upside too fast in the short term. Now consider what events are coming up. First, we have the newest weekly jobless claims numbers coming out tomorrow, and I wouldn't be surprised if these numbers set another record, even by a wide margin. Bringing the economy to a halt has consequences, and it's likely we've only just begun to see those consequences. The longer we leave the economy shut down, the more people will be laid off because businesses can only keep paying employees for so long without generating revenue. Though the market likely expects a bad number tomorrow, a substantially worse than expected number can bring the market crashing back down. Because in the end, it is people who generate economic activity by working and then using those hard-earned dollars to buy goods and services. And some forecasts expect the unemployment rate to spike from its 3.5% low to 20 and possibly 30%. That scenario is definitely not currently priced into the market. Then consider the fact that the stock market is ultimately a collection of businesses. And how are businesses valued? They are valued on their power to earn money. And guess what starts next week? Earnings season. We are finally going to start to see in greater detail how businesses have been performing with the economy essentially closed in these company reports and conference calls. Some businesses will still report record earnings, but those companies will be few and far between. As for all of the other companies, people know to expect bad earnings results. The question is, how bad? I think at this point the market is expecting extremely bad results, but the recent run from 18,000 to 23,000 makes me think that not enough bad news is priced in anymore. Not to mention that I don't think any companies will want to forecast what their full year earnings will look like. It's just too hard to predict at this point, and markets, though they try to predict uncertain outcomes, do not perform well during uncertain times. And the last thing I'll point out for some of you technical chartist folks out there is that today's 700 point jump occurred with the lowest volume since March 5th, as you can see on the bottom of this chart here. And just look at where the market went after March 5th. Often low volume on a large move in one direction can signal that a market is about to reverse because momentum in that direction is getting exhausted. And I'm sure all of you have noticed that the market, whether it's up or down on a given day, has had huge swings almost every day for the past 2 months. These large swings are likely the sign of an unhealthy market. Now, I don't pretend to be an expert on market technical patterns, but I figured I should at least point out these trends. So, what will I be doing in the stock market over the coming days and weeks? Well, in recent days, I have been waiting for the market to drop with nearly a 24% cash position in my portfolio ready to be deployed. Currently, I have no plans to sell any of my existing holdings because I know in the long term they will do very well, and there's a good chance that they could even outperform the S&P 500 if my predictions are correct. If the market remains at current levels or continues to move higher, I will continue to wait for better opportunities because equities just aren't as attractive as they were 2 weeks ago. And with so much uncertainty right now, I need to see very attractive prices before I put more of my cash to work. There's quite a few companies I have in mind that I'm ready to buy shares in. However, their prices have just moved up too far too fast, and I'm not willing to put my money into a business when the risk reward is not in my favor. And as Warren Buffett puts it, be fearful when others are greedy, and greedy when others are fearful. I suspect that some people are being greedy right now. So, what should you do if the market drops again? Well, I would start looking for companies that have lots of cash on hand and a very strong balance sheet. These are the types of companies that will weather this storm better than others. Of those companies, look for those who have a strong competitive advantage and those with a strong brand. I will be detailing some of these companies in future videos. Hey everyone, thank you so much for watching to the end of the video. I really hope you enjoyed it. Keep in mind that it's almost impossible to time a market top or bottom, but I just wanted to share my thoughts and hopefully valuable insight on the recent market action. Please don't forget to drop a like on this video and subscribe to the channel. I have many more investing videos planned for the coming days to help take some of the guesswork out of this confusing and volatile market. And lastly, I'd love to hear your thoughts on the recent market action. So comment your thoughts below because I'd love to read through them. Stay safe, and I will catch you in the next video.